Hello, have you come across terms like hire purchase, promo, price slash? Well, we'll be learning about some of these terms in this lesson. My name is Kingsley Linus. In today's mathematics lesson, we'll be learning about transactions in homes and offices, part 1. By the end of this lesson, you should be able to solve problems relating to office and household arithmetic. Let us consider transactions at home. Basically, buying and selling at home can either be for personal purpose or for household use. Now, every individual comes from a home, and they definitely do some calculations around the things they buy, the services they consume, and so on. We'll be learning about some important terms that have to do with transactions at home. In the course of this lesson, we will discuss terms like interest, income tax, discount buying, installment buying, and so on. Let us start with interest. Now, when you save your money in the bank, after a long period of time, you realize that the bank would give you certain amount in addition to the money you saved. This is what we refer to as interest. So, the extra money given by the bank is called interest. Interest is usually paid at an agreed rate, that is the amount of interest due per period as a proportion of the amount saved. So, there are 3 important terms when we are talking about interest: principal, rate, and time. We have a formula that we can use to find out what the simple interest would be on any given amount. That amount is usually called the principal. We have an example. For example, a person saves 62,000 naira in a bank for a year. If the interest rate is 10% per annum, 10% per annum actually means 10% per year. The saver will have 68,200 naira at the end of the year. That's an increased amount, isn't it? Now, how do we come about this amount? It is simply the original 62,000 naira plus an interest of 6,200, which is 10% of the principal. So you see, the saver will receive 68,200 as against 62,000 he or she saved. We have yet another example. It says, find the simple interest on 20,000 naira for 4 years at 6% per annum. Now, to solve that, we need to find out what 6% of 20,000 naira is. We are going to use our formula SI, that stands for simple interest, which is equal to principal times rate times time all over 100. Now we bring in our values. 20,000 is our principal, 6 is our percent, and then 4 is the time duration all over 100. When we cancel this, we can say 2 multiplied by 6 multiplied by 4. That gives us 48. And then we bring our 2 zeros. That gives us 4,800. So the simple interest on 20,000 for 4 years at 6% per annum is 4,800 naira. Now, let's look at another side to the term interest. When someone takes a loan or borrows money, that person is called a borrower, right? Now, the person who gives that money is called a lender. Now, usually, when a loan is taken, there's always an agreement for an interest. That is an extra amount that will be paid by the borrower to the lender at the expiration of the loan period. I hope that was clear enough. I simply mean when someone borrows money, call it a loan, at the point of payment, he will pay some extra money to the lender. This is what we refer to as interest. Interest is usually paid at an agreed rate, that is, the amount of interest due per period as a proportion of the amount borrowed. Just for emphasis, principal, rate, and time. We must factor these three words whenever we are calculating interest. Here is an example that explains interest some more. A man borrows 1,600,000 from a bank to buy a house. He is charged interest at a rate of 11% per annum. In the first year, he paid the interest on the loan. He also paid back 100,000 naira of the money he borrowed. How much did he pay back altogether? If he paid this amount by monthly installments, how much did he pay per month? Now let's proceed to see how we can solve this problem. The first thing is to find out what 11% of 1,600,000 naira is. And then to do that, we write 11 over 100 multiplied by 1,600,000. And that gives us 176,000 naira. So, the total money he paid in the first year was 176,000 naira as the interest on the money, and then 100,000 naira additional. So when we sum that, we are going to have 276,000 naira. Now, the second part of the question says, if he paid this amount by monthly installments, we are talking about the 276,000 naira. If he paid this amount by monthly installments, how much did he pay per month? So we'll simply divide 276,000 by 12. Now, if we do that, we are going to have 23,000 naira. It means he pays 23,000 naira per month for him to have achieved 276,000 naira over a year. Now, lastly, you realize that we can take off 100,000 from the principal, which was 1,600,000. When we take away 100,000, you realize that the man is still owing 1,500,000 naira. There is a particular amount of money required by the government from any individual who earns income from a job or a business. This amount of money is referred to as income tax. Let's find out what this income tax is. Income tax calculation varies in different countries. Some of the methods or approaches have been outlined. First, tax is paid each year on taxable income with specific given tax rates. Secondly, taxable income is simply the difference between the total income and allowances. And then thirdly, allowance amounts are specified. For example, personal allowance, child or children allowance, dependent relatives allowances, and so on. Recall I mentioned earlier that tax paid each year on a taxable income usually have rates. Here is a table that shows us the rates as applicable in Nigeria in the year 2020. Now, for the purpose of calculation in this lesson, we are going to use personal allowance at the rate of 6,000 naira, child allowance 2,500 naira, then dependent relative 4,000 naira maximum. Then, if both husband and wife are working, the child allowance can only be claimed by one person. So we are going to observe these rules for the purpose of this lesson. Here is an example to explain income tax. A man has a total income of 52,800 naira per annum. He has 3 young children. He claims 3,700 naira for a dependent relative. Calculate the amount of tax he pays. The first thing to do here is to find out his total allowance. And to do that, We have first 6,000 naira for personal allowance. We have 3 multiplied by 2,500 because he has 3 children, as the question says. And that gives us 7,500 naira. And lastly, 3,700 naira for the dependent relative. When we sum all of this, we would have 17,200 naira. Now, the next thing to do is to calculate the taxable income. TI here represents taxable income. And to find our taxable income, we have to take the difference between the allowances and his total income. So we are going to subtract 17,200 from 52,800. And that gives us 35,600 naira. Then lastly, we can go ahead to calculate the tax on the taxable income. The taxable income is 35,600. So based on this table, he earns below 300,000 naira. So we are going to calculate his tax with a rate of 7%. Now, 7% of 35,600, that is 7 over 100 multiplied by 35,600. That would give us 2,492 naira. So the tax payable by this man is 2,492 naira. Now recall, at the beginning of this lesson, I made mention of price slash. This is what we refer to as discount. It is actually a reduction on the price of certain products or services. Discounts are usually given when people buy things in bulk or when they pay in cash. For example, a digital media player costs 5,400 naira, but a 12.5% discount was given because the company was on a promo. Therefore, the digital media set was sold at 4,725 naira. So you see, the selling price is now lower than the cost price. We have an example that says a trader sells an article at 1,400 naira each, or 4 for 4,400 naira. How much is saved by buying 4 articles at once instead of 4 articles separately? How many percent discount does the trader get for buying 4 articles at once? So the normal cost of these 4 articles would be 4 multiplied by 1,400. And that gives us 5,600 naira. Now, at a discounted price, these articles, the 4 of them, would cost 4,400 naira. So we can find out how much is saved by the buyer when he chooses to buy the 4 items at once rather than buying them separately. And to do that, we'll find the difference between 4,400 and 5,600. When we do that, we would have 1,200 naira. And the percentage discount is 1,200 naira, which is the savings, over 5,600, which is the total amount it would have cost buying these articles individually. Then we multiply it by 100 and it gives us 21.4%. Now, there's a style of buying things where someone buys an item, pays a certain amount that is less than the amount of that item, and starts using the item, then pays the remaining of the money over a period of time. This is simply what we refer to as hire purchase or installment buying. We have an example to explain installment buying. The cost of an iPod is either 34,000 naira in cash or a deposit of 4,000 naira and 12 monthly payments of 2,750 naira. What is the difference between the monthly installment price and the cash price. Now, installment price is simply the deposit plus the installments. Now, recall that 4,000 was the initial deposit, and then 12 by 2,750 naira installments. And that will give us 33,000 naira. So when we sum 4,000 naira and 33,000 naira, it gives us 37,000 naira. So the price difference is going to be 37,000 naira minus 34,000 naira, which is the original price of the iPod, buying it in cash. And the difference is 3,000 naira. So a buyer will pay additional 3,000 naira buying this iPod on hire purchase. Now it's time to do it yourself. Pause the video and try out these questions. I'm sure you are done. The correct answers to this question, for number 1A, we have 400 naira. For 1B, we have 4,000 naira. And for number 2, we have 11,500 naira. For question 3, to find our taxable income, we simply subtract this from this. And that gives us 18,900. The next one, we have 18,080. Next, we have 45,900. We have 68,840. We have 6,490. And lastly, we have 4,040. And then the answer to question 4 is 10,350 naira. If these were your answers, you are correct. This is where we come to the end of this lesson. But before you go, let's look at a quick summary of all we've learned. First, we learned that transaction, which can also be called trade, is simply the act of buying and selling. Secondly, we learned that everyday arithmetic can be categorized into personal, household, civil, or commercial. Going on, we learned that there are some words associated with arithmetic in the home. Words like interest, income tax, discount buying, installment buying, and so on. We also learned that bankers want people to save money. They give extra payments to encourage savings. This extra money is called interest. Going further, we learned that government requires people to pay a part of their income, and this money paid by individuals is called income tax. We also learned that a discount is a reduction made from the gross amount or value of something. For example, a drop in price made for regular customers, usually calculated in percents. And lastly, we learned that purchasing a commodity over a period of time, the buyer gains the use of the commodity immediately and then pays for it in periodic payments called installments. I'm sure you know it's test time. Let's try out some test questions. Question 1. Find the simple interest on 25,000 naira for 3 years at 5% per annum. Option A, 1,250 naira. Option B, 1,020 naira. Option C, 1,000 naira. Option D, 3,750 naira. The correct answer is option D, 3,750 naira. Question 2 says, a husband and wife are both lecturers. They each get a salary of 74,000 naira per annum. They have 3 children and the husband claims 25,000 naira for a dependent relative. Assuming the wife claims for the children, what is the total tax paid by the husband and the wife? Option A, 4,570 naira. Option B, 5,745 naira. Option C, 7,245 naira. Or option D, 10,550 naira. The correct answer is option C, 7,245 naira. I'm sure you had a wonderful time in today's lesson. Thank you for your time. Till we see you again in the part 2 of this lesson. Bye-bye.